Hey there! So, if you're an entrepreneur outside the US, you already know the United States is the biggest market in the world. But here's the billion-dollar question. How do you get paid like you're actually in the US? Well, today, we're going to crack that code. We are demystifying the whole process of setting up and managing your US banking, no matter where you are in the world. Okay, let's jump right in. Here's the game plan. We're going to cover everything, from the nuts and bolts of opening your account to making sure you keep it open. And yeah, we'll even get into some brand new compliance rules you absolutely have to know about. Think of this as your guide to building a solid financial bridge into the US market. You know, this really is the core of the problem, isn't it? You can have the most amazing product, the best service, but if you don't have a US bank account, it just looks less professional. Getting paid becomes this huge, unnecessary headache. Solving this is way more than a convenience. It's a make or break step for succeeding in the US. All right, first things first. To get that all-important account, you've really got three main options. We're going to break down each one so you can figure out which path makes the most sense for you and your business. So, you've basically got three main plays here. Path number one, you can physically fly to the US, walk into a bank, and open an account in person. Path two, you can stay right where you are, set up a US company, an LLC, and then apply online. Or path three, you can appoint a trusted manager in the US to handle all the paperwork for you. Each one of these has its own set of rules. So let's talk trade-offs, because there's always a catch, right? Going in person gets you a real relationship with a big bank like Chase. But obviously that means flights, hotels, time, it adds up. The online route is super convenient, but it's not available for every country and it's for businesses only. And the nominee manager? No travel needed, which is great, but you're placing an enormous amount of trust in someone else to control your money. Okay, so great news. Your account is open, you've landed your first US client. Awesome! But before they wire you that first payment, they're going to ask you for a form. And trust me, understanding this little piece of paper is absolutely vital. Let's break it down. Look, don't let this form scare you. It is not a tax bill. All it does is tell your client, and by extension the US government, hey, I'm not a US taxpayer. That's it. It's the key that unlocks your full payment so nobody withholds 30% for taxes that you don't even owe. And this right here, this is where so many people get tripped up. But it's actually pretty simple when you see it side by side. W8BEN is for individuals. Think freelancers, solo operators. W8BENE, the E is for entities. That's your corporation or your partnership. You just gotta know which box you fit in. All right, let's talk about something that honestly keeps a lot of founders up at night. Getting your bank account shut down out of the blue. It happens way more often than you think, and it can completely derail your business. Let's look at the hidden triggers you have to avoid. I mean, can you imagine getting this email? It's the one nobody ever wants to see. And you know the most frustrating part? US banks don't even have to tell you why they're closing your account. You're just left scrambling. It's a massive risk to your operations. So here's what's really going on behind the scenes. Banks have these automated systems looking for risky behavior. If your account looks like a simple pass-through, money comes in and whoosh, it's immediately wired overseas. That sets off all kinds of alarms. They want to see what looks like a normal operating business, not some kind of a money funnel. Okay, so how do you actually avoid all those red flags and build a banking setup that's going to last? Well, it's not about being sneaky, it's about being smart. Here's the playbook that the pros use. The single biggest pro tip is this: create a financial buffer. You have to think of your main US bank account like a fortress. Its only job is to receive payments from your US clients and look as stable and low risk as possible. And that means you never, ever fire off international wires directly from that account. And here's how that smart flow actually looks in practice. Step one, your client pays into your main US bank. Let's say it's Mercury. Step two, you move that money from Mercury to an intermediary, like Wise. Now, from your bank's perspective, that just looks like a normal domestic transfer, super low risk. Step 3, you use Wise to handle the international part of the journey. This two-step process is the key to protecting your main account. These aren't just tips, they're really habits you need to build. For one, never put all your eggs in one basket. Always have more than one account. When you open a new one, warm it up with small transactions before you start pushing big numbers through it. And always keep a balance in there. It signals to the bank that you're a real, healthy business. Okay, last but definitely not least, we need to talk about a huge new compliance rule that's been causing a ton of confusion. If you have a US company, you have got to pay attention to something called the Corporate Transparency Act, or CTA. So, what's going on with this law? Well, it's a bit of a legal mess, to be honest. It went into effect in January, but then in March, a court in Alabama said it was unconstitutional. The tricky part is, that ruling only applies to the specific people who sued. For everyone else, it's still kind of a gray area while the government appeals the decision. It's created a lot of uncertainty. So what does this mean for you? Well, the smartest move really depends on when your company was created. If you formed your company in 2024 or later, the safe bet is to just comply with the law and file your report. If you have an older company, you've got until the beginning of 2025, which gives you a bit more time to wait and see how all the legal challenges shake out. You know, when you step back and look at the big picture, it all comes down to this. Succeeding in the US isn't just about having a great product. It's about building a rock-solid financial system to support it. That means being smart about your setup, being careful with your day-to-day operations, and just keeping your ear to the ground on how the rules are changing. And that's really the final question, isn't it? Your business is ready to take on the world, but is your banking strategy ready to back it up? I hope this explainer has given you the clear, practical roadmap you need to answer that question with a very confident yes.